Most people think the dollar is in decline. And it did have its worst year, the first half of the year, since 1973. At the same time, we're seeing the rise of stablecoins. Stablecoins have accelerated to roughly 300 billion. Cryptocurrencies, we think, will continue to move forward because they represent not just an asset class, but a technology, and in the case of Bitcoin, a new private, digital, rules-based monetary system. Now we have a native peer-to-peer currency, so we can take a lot of the middlemen out of the equation. Bitcoin, hands down.
As the market gears up for the coming bull run for Bitcoin, we hear from Cathie Wood and her current market outlook and predictions for crypto and Bitcoin in the weeks ahead. As the momentum is building and the institutions are quietly positioning themselves, Wood says everything is about to change. She says the next phase of the crypto cycle is critical, and she's stacking big bets in her portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Cathie Wood says she's remaining bullish on digital assets after increasing her position size during the last bear market. Embracing an unyielding enthusiasm for the crypto realm, Cathie Wood confidently predicts that explosive growth is looming on the horizon. She urges investors to capitalize on the opportunities presented during market downturns as well. Ever since Bitcoin tumbled from its all-time high, the cryptocurrency market has struggled to regain its footing, leaving investors anticipating a substantial bounce back. However, Cathie reassures that a long-expected surge awaits. Let's get right into the latest interview with Cathie Wood, as she gives her market outlook and prediction for the days and weeks ahead.
We do not believe we're in a bubble. I think the reason many people are afraid that we're in the bubble is the most seasoned investors in the market today were in the market in the tech and telecom bubble, and they remember the bust very well. There's a lot of scarred tissue. I actually think that the worry about a bubble is good for the market. Mm-hmm. The strongest bull markets climb a wall of worry. I was in the market during the tech and telecom bubble, and that was not a wall of worry. That was investors, speculators, including taxi drivers who never invested before, just throwing their money into a dream. But the technologies weren't ready back then. The costs were too high. The seeds were planted back then, and they were chasing the seeds, which have been germinating for the last 25, 30 years. And now they're beginning to flourish. And so I think the fear is good. Yes. It will prevent craziness, the craziness that happened during the tech and telecom bubble when investors, again, just threw money, threw capital at eyeballs, a lot of contagion in the banking system. We don't think we're in that environment. The second time it reached this level, a little above this level, was in 1980, at the end of the great inflation started in the 1970s when the US closed the gold window in 1971. And what happened after it reached that level? It then proceeded to decline for years. Why? Because the flight to safety or the hedge against inflation was no longer needed. We think this time is going to be more like that time. So we would not be surprised to see gold peak out in the near term. And yet cryptocurrencies, we think, will continue to move forward because they represent not just an asset class, but a technology. And in the case of Bitcoin, a new private, digital, rules-based, that's the most important phrase, rules-based monetary system.
So you still believe it's going to hit $1 million?
Yes, we do.
do you even have in mind the time frame that you think that it will hit $1 million by then?
So what we've been saying, our bull case has been 1.5 billion.
Yes.
But we're seeing stablecoins usurp one of the roles of Bitcoin.
Yes, exactly. You just mentioned that.
Yes, in the emerging markets especially. So maybe $1 million is more our bull case.
It's going to slow it down a bit, you think?
Yes, I do. Our base case is roughly 750,000.
Wow.
So from 150 and 120,000, we still have a nice way to go. And we think that will happen by or sometime in the next 5 to 7 years. So gold is both a store of value, as is Bitcoin. Gold is a hedge against inflation, as is Bitcoin. It's also a hedge against deflation, counterparty risk, as is Bitcoin. But it is not a technology the way that Bitcoin is. If you think the Bitcoin blockchain is the layer of the internet that the developers in the late 80s and early 90s did not build. And they didn't build it because they never dreamed that commerce and financial services would take place on the internet. Think about that. That was a long time ago. In fact, everybody was saying, I'm never putting my credit card on the number on the internet. Well, that changed quite a bit. In the meantime, we've had to use instruments like credit cards and debit cards, but no native currency. Now we have a native peer-to-peer currency, so we can take a lot of the middlemen out of the equation, and that's very important. The investors today are doing really diligent work on the kinds of cash flows that not only AI will deliver, but robotics, energy storage, blockchain technology, and multi-omic sequencing. So 5 major platforms evolving today. Most people think the dollar is in decline. And it did have its worst year, the first half of the year, since 1973. If we're right on the fiscal policy, our corporate tax rate, given one big beautiful bill, OB3, our effective corporate tax rate, including the depreciation measures, we think is down to 10%, which is roughly the lowest in the world.
Cathie says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Cathie has been stressing to investors for months that all the factors are beginning to align right now, a period characterized by parabolic moves upwards in crypto prices.
Now, there's nothing like competition to get us going. And now we have regulations coming down and tax policies supporting innovation across the board. We had our hands tied behind us on nuclear policy, on rare earths. I didn't know until recently that in 1980, our regulators in the US declared that the waste from rare earth mining was nuclear and was to be regulated like that. No wonder we don't have rare earths. That is changing. All of that is changing. So I think China has capitalized on our regulations increasing over the last 25 years. Now it's a game on. So, and we're very impressed with what they've done in AI as well. DeepSeek was a moment, right?
Yes.
It was a moment. And even Sam Altman and Jensen Huang in the United States complemented the algorithms that they introduced. Now they're open weight models, so now we can use them, which is very interesting that we're having all of this angst about chips, but not about the software. That's very interesting.
True.
So I think we're getting closer to striking a trade deal. And, from a national security point of view, I understand that one of the primary roles of any government is to protect its nation. So I think we let our defenses down also. And so those are going up. But that doesn't mean that this competitive threat is necessarily bad if the shackles are off of us now, and we think they are.
Of course. The last one, I know probably the answer, but I'll ask it anyway. U.S. stocks or China?
It's very interesting. We moved out of China in 21 completely, and we've just started moving in because the valuations are so low there.
Okay.
If we get a trade deal, I think the valuation gap will close, or at least close somewhat. So I think Chinese stocks are going to do pretty well. The risks are higher, though, because we've seen Xi Jinping, one of the reasons we moved out, there was the nationalization of online education. They did banish some of the greatest tech entrepreneurs, and that's not a welcome environment for innovation. So there are risks, and I think there are more risks there than there are in the United States. But the valuation gap is so large that I think China is going to be a very good place to invest.
Amazing.
If I had to choose between the two, if you're a foreigner and you invest in the U.S., you'll get the U.S. upside and the currency upside.
Okay, last one question. If I have $1 million, I don't, but let's just assume I do, and I trust you, where shall I invest? Where would you advise me to invest?
I know what advisors would say. Make sure you diversify. Don't put all your eggs in one basket. But what I will say is most portfolios are short truly disruptive innovation. They think they have innovation because they have the Mag 6 or the Mag 7, right? We think the amount of innovation taking place away from the Mag 7 is going to deliver returns that are going to be twice as good. So if we're right, and this we have in our big ideas 2025, if our research is correct, and that's a big if, but if it is, then companies involved in truly disruptive, technologically enabled innovation are going to deliver returns that are in the 40 to 50% range at a compound annual rate because of the super exponential growth that we expect. We think that innovation in stock market indexes, the broad-based ones, will go from roughly 30% now to roughly 80%. So we think innovation is going to grab the lion's share of the appreciation going forward. So don't be short truly disruptive innovation. Make sure you allocate enough. It's more risky, but with higher risk comes higher returns.
Cathie Wood points out, with real money now flowing in, she emphasizes that the crypto market has become more significant than ever. Institutional investors are driving the price of cryptocurrency, which will yield massive gains in the next 3 months. Wood believes this will underscore Bitcoin's enduring relevance as an asset and as a hedge against currency devaluation. She anticipates that BTC will continue its parabolic run. Cathie Wood's main focal points this year has also been the movement in crypto legislation in the House, signaling the growing interest in the crypto space. Although crypto legislation might face challenges due to political opposition, Wood advises the company in which she invests to spend heavily now in order to take advantage of huge growth potential. She estimates that ARK's concentration on technology advancement is worth about $7 to $8 trillion, or less than 10% of global equities markets. Emerging markets are relying on digital currency, and Cathie believes that based on the current market outlook, decentralized finance will take over and usurp the roles of most financial services companies. What do you think of Cathie Wood's interview on the current financial market? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.